That's why. Hey, everybody. What did you try? This is a new thing we're trying out.
Failing miserably. Whoa. All right, so take two.
Take two.
Should we be very serious?
Yes, very serious now that you don't have the reef.
Hello, everybody. Scott Gregorio here.
And Edgardo Ballantyne.
Okay, fuck serious. So what's going on, brother?
Not much, man. Thanksgiving was fun.
Yeah. Thanksgiving was good. Happy Thanksgiving to everybody. I want to talk a little bit about the market, but dude, we got some good questions in that.
Yes.
I think we could spend the bulk of our time answering these questions.
Yes.
But real quick, the market's been going freaking nuts.
Look, the market has been crazy, and we were just talking off camera about that. I mean, every single day, it's high and it's low, and it's high and it's low, and at the end of the day, it doesn't change.
Right.
And then we have days where we lose 20 basis points. There's days where we gain 20 basis points. And what this does is it's moving the rates, 1/8% or so, but it's moving that every single day.
Yeah, and it further supports what we talk about seemingly every freaking week. It's all about these trade talks with China.
It's all about the trade talks with China.
It was announced that somebody hinted, or somebody close to the negotiations hinted that Trump was going to hold off on the talks with China until after the election, and the stock market plummeted. Interest rates went down with it. I think that was on like a Friday.
Yeah.
And then over the weekend, it was announced, no, we're making some progress. Stock market shot up.
We see
interest rates went up with it.
Yeah.
So day to day, there's breakdowns.
And then again, a couple days ago,
right.
We're gonna wait until later, and we're gonna hike the tariffs in December. So it's all over the place.
It really is.
And the market is just following blindly to every rumor out there.
Right. And look, it further supports, if these trade talks break down, it's going to be bad for the stock market, good for rates, and if it gets resolved, it'll be the opposite of that. So, look, just stay tuned. We'll keep keeping you guys updated, but...
Look, to be honest, when it comes to those trade talks, I almost want them to get over with. Let's just... Because right now, the market is hyper-focused on that. And it's ignoring some other indicators that should be weighing more heavily in the overall view of the economy.
Yes.
So once we're over with that, and when we say that if this gets resolved, it's going to be great for the stock market, bad for the interest rates, but then everything's going to get normalized, and then we can go back to looking at the normal financial indicators. Where's the unemployment rate? Where's inflation? Where are all these other things?
Look, I got to push back on you with that, because although historically that's accurate, with this administration, tweets have been jacking up the markets for 3 years now, and we're heading into an election cycle. I think that these other non-normalized factors mess with the market less, but I still think they're going to be impacting the market. I don't see any time in the near future where we're really basing decisions and just the economic indicators are the only thing moving the markets, which I should argue are the only things that should be moving the damn markets. I think, and it started with this administration. I'd be very interested to see when the administration changes, whenever that is, if that continues. Is this unique to Trump, or is this just unique to the world today?
Yeah, again, while that is true, I think the whole... how do I put this lightly? The overall state of the administration has been somewhat normalized at this point, because there's a lot of other things happening politically, like the trade talk, like the impeachment talks, that are really not affecting the market as much as they should, because everything is China focused.
Fair.
So, we'll see.
We'll see.
Look,
one of us is right.
That's right.
One of us is right. We don't just have to agree. My wisdom and experience will prevail. So, questions.
Blinded by wisdom.
Questions. So, two great questions. The first one we got was, is the lowest rate always the best option? It was interesting we got that, because I've been doing a lot of training with my team on that topic, and the answer is obviously no.
No, but it's not so obvious. It's not so obvious
Fair.
because...
Obvious to us.
Right. When you're a consumer, that's all you know You just it's simple. When you're going into a mortgage, when you're going into anything that has to do with finances, and you are lending money, you're taking money, you're borrowing money, you know that the higher the number, the worse it is, the lower the number, the better it is. Right?
In theory, yes.
That's
right.
That's what you know
That's
about
what's known.
finances.
Right.
That's what they teach you about finances.
Right. And you think the only thing that indicates that is that, or that influences that,
It's
is
the
interest rates.
Just like when it comes to investing. When it comes to investing, the only thing that you know when you walk into investing is the higher the rate of return, the better it is. And, there's other things like fees and like
dividends and all there's all these other components.
How safe the investment is. There's a lot of different things. Well, the same thing happened with mortgages. The same thing happened with loans overall. So I like one of the lines that you tell your clients, and it makes sense. And there's the spreadsheet approach, and there's also a livability factor.
Yes.
There's what do you feel comfortable with? Because a lot of times we sit with people and we can show them that financially or mathematically one approach makes a lot more sense, but simply for them, they will feel more comfortable with another thing. And the example that we always give is, and when it comes to interest rates, a lot of people, or to payments, a lot of people are going to be more comfortable with a lower payment and more money out of pocket.
Right.
Where some other people would want to keep some money in the bank and are more comfortable with higher payments.
And I agree with that, and the livability thing is something I focus on a lot, but let's go a little bit deeper than this. For example, we have a program that has a slightly higher interest rate, but no mortgage insurance.
Right.
Okay, whenever you're putting down less than 20%, you typically pay mortgage insurance. Some programs don't have mortgage insurance, which is a marketing thing, right? We call it lender-paid mortgage insurance, which basically means the MI is built into the rate.
Right.
So we have a program where, yes, the rate's a little bit higher. Maybe instead of 3.75, you're at 4 or 4.125 or something like that. But there's no PMI. And when we do a side-by-side comparison, the higher rate without the PMI gives you a lower payment.
So what he's saying is there are some cases where even though a loan will have a higher rate than another loan, that loan with the higher rate has a lower payment than the rate with than the loan with the lower rate. And what we do with our clients is every time we have a client that qualifies for a program like this, we put the two loans side by side.
Right.
And so far, 100% of the time when they qualify for these loans, the one with the higher rate has a lower payment every single time.
Yes, and look, it's no different than buying a house, right? Is a $200,000 house cheaper than a $300,000 house? Well, it depends. Is a $200,000 house in Paseo where the taxes are $10,000 a year and the HOAs are $400 to $700 a month depending on where you live in there, versus a $300,000 house in Cape Coral that has neither of those things, versus a $300,000 house in Naples where the taxes are cheaper,
right?
Because you don't have assessments and stuff.
Right.
So,
or no flood insurance.
Just on and on and on. So it's look, the point is this, okay, and this is what we help our clients with. You have to understand the totality of the scenario, and most people don't, because this crap isn't taught. It should be, but you really have to look at the whole picture. So it's short-sighted to shop around and go, who has the lowest rate? Because without looking at all the factors, you may end up in a worse situation.
Yeah, you may end up with a higher payment. And that's what I always go back to with my clients is, look, the real question is, what are my payments going to be?
Right.
Because what if I can give you a higher rate and a lower payment? And at the end of the day, what you're going to live with is the payment. And I always tell this to my clients, look, while you're buying a property, while you're buying a house, the most important thing in your life seems to be the interest rates, right? If the interest rates go up a little bit, then, people freak out. If they go down, people celebrate. But at the end of the day, what you're going to live with is your payment. And I always give the example of the car payment. A lot of people, most people, don't know what their car loan interest rate is, but everybody knows their payment.
Right.
So if I can give you a lower payment, who cares about the rate?
Right. And when you say that, it sounds like bullshitty, but it's not. It's not at all.
Or what I tell my clients is,
what's up, Art?
Take the lower rate.
Yeah.
And the higher payment.
Yeah.
That's fine with us.
That's the thing. Like, we don't steer. Like, here's the three options. Like, God bless you, run with it.
So what we're talking about is, particularly the loan that he was talking about is, it's a version of two loans. We can give you the full loan, so you don't even put 1% down. You don't have to put any percentage down. If you're a first-time home buyer, if there's no first-time home buyers, then you only put 1% down. It has no mortgage insurance. In my opinion, is the best loan out there.
It really is, and it's something that it's not something you find at every bank. It's
No.
I can't say we're the only ones with it, but I only know of one other place that has it. It's a very unique program, and between him and I, we have it. So that's the first thing. So again, understand the big picture. I just had that conversation with the client. I'm glad I'm on the same page with you. Me too. Let's look at the next question that we got.
When is the right time to call us? When is the right time to call a lender?
Look, I just got a referral over the weekend, and I reached out to the client. It was a past client type thing for Facebook, and I reached out to this new person, and she said she didn't want to meet with me or talk with me. She said, I'm getting my credit ready first.
Right.
And I cringe when I hear that, because I cannot tell you how many times I've had somebody fixing their credit, not knowing how to do it right, screwing their credit up. So I think, now on the other side of it, I met with another client who follows me on Facebook and watches all my content, and she called me up. She said, look, I'm a year out. I want to put together a game plan. I know I'm not ready, but I need an expert to help me put that game plan together. And that's the right way to do it. The right way to do it is, whenever you think you're going to be doing this down the road, to immediately get in touch with us so we can help them put together a game plan. I think sometimes people feel like, well, I think there's two things. One, I think a lot of loan officers don't do that. Like, don't offer that service.
Right.
Is the biggest problem.
Right.
And I think some people think that we're going to, close them and, try to force them into buying a house at the initial conversation, and that's just not the thing.
And not just that. Some people think that if I say no to you today, then that means that you're marked with a no, and that you will not be able to buy a house anymore. And look, that's not the case. And like he's saying, the earliest we can meet with you, the better it is. For a couple of reasons. Because we can steer you, we can help you to, do the activities that are going to help you get into a better loan. But also because a lot of times I see a lot of people wasting time, wasting 6 months, 7 months, trying to fix something that it's just not a problem for us.
Yeah, or exactly, they're getting ready for to meet some standard, like a 10% down payment
that they have in their hand.
That's not a thing. Or
they're missing 5 months to pay off their car, and they want to wait for those 5 months where we won't even count for that car payment.
I was talking to a client, and she was capped at $250,000 in her mind. She said, that's my max, I want to go. So she wasn't able to find any houses in that price range, and I got on the phone with her, and I said, look, what's with the 250? Because look, you and I both know, you go from 250 to 275, it's a different world.
Yeah.
So I said, what's with the 250?
When it comes to real estate.
When it comes to real estate, yeah.
Not so much with the payment.
No. So she said, well, I got to put down 20%, and I only have $50,000. And I was like, why? And she goes, well, I can't afford the mortgage insurance. And I said, okay, how much is mortgage insurance? And she goes, well, it's like $400 a month.
Well, isn't that
and yeah, I ran the numbers with 85% financing versus 80%, and I think it was like $31.67. And she said, wait, are you sure?
Yeah.
I said, yeah. And she said, you're wrong. I said, I'm not.
Yeah. Hey.
And so she put this self-limiting thing on her. And by the way, she was under contract for $300,000. Her world was good. The numbers worked out perfect. She was blissfully happy. And a lot of times people have these self-imposed ceilings or limitations or beliefs that are just not accurate.
Yeah.
So the sooner the better is the answer.
Right.
And we're more than happy to meet with people, whether they qualify or not. Like you said,
how much you charge per meeting?
Oh, I charge $0. What's your fee?
$0.
Okay, $0. So $0 is currently the rate.
We offer coffee.
Yeah.
We offer waters.
Flavored waters.
Yeah,
it's very fancy.
Yeah.
So anyway, that's the answer to the question. Please bring us in, right? Like, the best time to put together an estate plan is not when you're on your deathbed.
Right.
Right? The best time to talk to us is not when you're ready to put in an offer on a house. There's a lot of services we provide, knowledge we provide, that should go into the planning process, and that's something we pride ourselves in.
Yeah, and you don't want to be in a position where you come to us and you only have one option, and whether you like it or not, that's the only option. If you come to us earlier than, the last day of your current lease, then we can set up a plan where you're going to have multiple options for your situation, and we can steer you towards the one that's best for you.
Yeah. Or maybe you don't qualify right now. You are going to have to renew that lease, and we'll work with you through that time.
Right.
I close people all the time. You know, one of the things on my website that I'm big on is, I know we both are, I don't say no, I say when. And if I can't, what do you...
I have a comment asking if we have cookies. Yes, we have cookies too.
We could provide cookies if that's what it takes. But I totally lost my train of thought on that whole thing.
I'm sorry.
Anyway,
It's
the cookie
my
thing
wife.
throw us. That's your wife.
It's my wife. Yeah. She doesn't
Thanks,
think,
Marisa.
She doesn't take this seriously.
All right.
Listen, I like this question because it's timely. A lot of people right now, especially people that are self-employed, might not qualify because we're counting on their last 2 years of tax returns.
Yeah,
it's
baby.
very, very important for all of those self-employed people that may not qualify or that don't qualify for the amount of home that they want. Hey, come and talk to us now because we can help you on what's the best way to, do your taxes next year, to structure things for you to be able to qualify and to do things right. A lot of people don't do their tax returns properly, and that can hurt them. So now it's a good time to make sure if you need somebody to connect with a CPA, we have people that we can connect you with. So that's that. And then the last question was, what's the minimum credit score that you need for a 0% down payment assistant program?
And what's the answer?
620.
620 is the number.
620 is the number. We used to have a 660 threshold.
Yes.
Now it's 620. So guys, look, rates are still historically low. I know we're talking about the rates moving, but they're still historically low. They're the lowest they've been in the past 4 years or so, lower than they were before last election. The housing market, it's still very strong, especially entry-level homes. So we're talking about those 3.2, 4.2, up to $400,000. It's a very strong market for those. And guys, I mean, these programs with 620 credit score, no down payment, no mortgage insurance on some of the programs. I mean, it's a good time to buy.
You know, it's interesting. I was talking to a guy that works for me, and he's a young kid that I'm training, and he's out looking for apartments. And he was like, dude, he said, anything under $1,000 a month is a shithole.
Yeah.
He said, to get something moderately decent, I'm looking at $1,300, $1,400 a month, and we're doing mortgages for people with payments less than that all the time. I'm like, yes, that's why you should definitely buy a house versus renting. It is so much cheaper per month. Yeah. And the obstacle used to be the out-of-pocket, and it's just none anymore. In fact, a lot of times it's more money out of pocket to rent when you're looking at first, last, maybe first, last, and security.
Absolutely.
So, look, that's what we got for you. We will be back next Friday, and we'll do it.
Yeah.
We'll do it.
See you
all right,
next
everybody.
week.
See ya.